makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London in for Francine Lacqua. Here's what's coming up on today's program. The New Year hangover. It's one of the weakest starts to a year for stocks and bonds in over a decade. Today's Fed minutes, however, may signal whether investors thought last year's rally was actually overdone. Meanwhile, in deal news, Airbus begins initial talks to acquire the cybersecurity and data unit of Atos in a deal that could value the business at up to $2 billion or 1.8 billion euros. Plus, a new leader in the global EV race as Chinese automaker BYD outsells Tesla for the first time in history. Let's take a quick look at the European markets map, though, because, of course, we know the European trading session is starting to pick up a little bit. You are seeing a risk-off sentiment, though, something we saw in futures across the board. You are seeing some underperformance, specifically in kind of the periphery, the Italian MIB, for example. But what's important to keep in mind is that it is still very thin holiday trading volume. The first week of January is seasonally always going to be very weak, and it's also going to be kind of a moment where some moves may actually be exaggerated. I'll give you just one example. That's the equity picture you're looking at. But even in the bond market, you're looking at a 10-year yield of 398, higher by 5 basis points among just a handful of trades because, again, very, very thin holiday trading volume. Actually, that's where I want to start with our markets guest this morning. Derek Halpenny, head of research, global markets for EMEA and international securities at MUFG, joins me right here on set. Derek, pleasure to have you on the program.
Morning.
What do you make of this move? A 10-year just shy of 4%.
Yeah, as you mentioned earlier, I think you have to take it in the context of what's happened during, well, if you go back to the highs in yields in October, 85 basis points in the 2-year, 110 basis points in the 10-year. Equity markets have rallied 16% from the low point in October. So we've just had this big risk-on trade with yields coming down as the markets price in more and more rate cuts from the Fed. And I think it's an understandable, rational question to be posing at the beginning of the year. Was it overdone? Was it positioning? Was it technicals? And all of that kind of plays into, I think, the appetite to prompt some correction, like what we're getting.
Well, speaking of corrections, let's talk about the dislocations in the market as well. We're talking a lot about the yield story. It feels like the dollar has kind of been marching to the beat of its own drum, partially driven by the rate cuts that are getting priced in the market, but also partially driven by some of the positioning that we're seeing. And yet, here we are talking about potential recession in parts of the world, and we're looking at euro dollar at 110, cable at 126. Talk to us about your dollar view.
Yeah, well, I think that's actually one of the highlights that we have in terms of the reasoning why we think the dollar is going to recover before possibly weakening later in the year. And ultimately, we don't expect any kind of big move weaker, i.e., let's say, for example, a depreciation of the dollar of north of 10%. If you go back to 1990, there have been 6 periods when the dollar has weakened by 10% or more. On every single occasion, that has coincided with a positive global growth backdrop, either coming out of crises like the global financial crisis or COVID, or in Europe, the strength in growth in 2017. Every example, there was a positive global growth story. And I struggle to come up with a positive global growth story for this year. We may stabilize at these weak levels, but the consensus is that we drop marginally. And that's just not a kind of a global backdrop for a sustained sell-off of the dollar. So that's why we think the challenges that lie ahead, that could be more obvious possibly in the first half of the year as real yields, real policy yields continue to rise as inflation falls. That will be challenging for the dollar to weaken, and I think we're going to see some recovery.
But let me push back on that narrative here. One of the tailwinds for the economy that might potentially drive, global growth is consumer resilience at the end of the day. You were talking about this kind of drop in inflationary numbers. Doesn't that kind of create a built-in tailwind for consumer spending around the world, which would then factor into the global growth story you're talking about?
Yeah, I think it will take time for certain elements to kind of feed in and start to become evident in the economic data. And that's why we have the dollar weaker story, more of a second half of the year story.
Yeah.
So, for example, China, we're seeing a lot of policy implementation taking place at the moment, but there's a lot of challenges still there at the moment, and I can't see growth picking up any significant way over the first half of the year. So I think from that perspective, it's not really a positive story yet. And in Europe, certainly the data at the moment is not indicative of any kind of imminent pickup in growth. So while I get what you're saying, I would still say that the monetary transmission mechanism, which we think will reverse after the easing in financial conditions that we've had in November and December, will act as a headwind, if you like, in the earlier part of this year.
Well, let's talk about the ripple effects then. If you're talking about dollar strength, do we then revisit euro-dollar parity, for example, which is something we discussed just within the last 12 months? Do we discuss sustained weakness in the pound? What kind of numbers are we looking at here?
Yeah, again, like I emphasize the fact that we're not expecting big moves one way or the other. Flipping it the other way, it's very hard to be uber bullish on the US dollar when the Fed will be cutting rates this year. Yeah. And they'll probably be cutting rates by the end of this year by more than most other G10 central banks. So in that context, as long as the pricing in the rates markets remains consistent with that story by the end of the year, there's going to be, impediments to a big period of dollar strength. So to answer your question specifically, 106, possibly 105. I'd be surprised if we broke 105. If you look back at euro dollar, whenever we've broken 105 to the downside, there's been significant macro events that have explained that move. And if that doesn't happen, I think, breaking below 105 is going to be difficult just on the kind of relative macro story that plays out.
But how much of that is a function then of capital flows, for example? Some of your colleagues who would be in the dollar bull camp, as you are, would say that it's the capital flows narrative, the idea that weakness in Europe or weakness in Asia would then create some sort of underlying bid, not just for the dollar, but for American assets broadly. Are you saying the capital flow story may not overrule the rate story?
Well, I think, to answer that in part, obviously you need to look at valuations, and, equity markets have done well everywhere, but of course the US has outperformed, and certainly from a valuation perspective, I think equity markets globally are a lot cheaper than what they are in the United States. So I think from a capital flow perspective, and then of course you have to add in on top of that the current account story, and that is obviously less favourable in the US than it is, say, in Europe or certainly in Japan.
Well, factor that in for us then. We're going into a US election, a fiscal deficit, and yet people still buy American assets in a crisis. What's up with that?
Well, it's the largest, most liquid capital market in the world. So if there's a rush for safe haven assets, that's what's going to happen, and the dollar would certainly strengthen. So, in terms of our view, if there's going to be volatility, we'd expect that perhaps in the first half of the year rather than in the second half of the year. But of course, if there's a big risk-off event, then the dollar weakening by the end of the year is probably not going to happen. So you always have to factor in that risk. But we're not, I guess, penciling in a kind of a financial crisis type event that would fuel substantial further dollar strength.
But then you do, of course, have the conversation of the fiscal deficit, the current accounts, as you just talked about. How do you even trade on something like that? After the U.S. Presidential election, the very first thing the new or incumbent president has to do is deal with, again, raising the debt ceiling. So January 2025, first line item. How do you price in something like that? How do you trade something like that?
Well, I think, in terms of those points specifically, those are very difficult to price and to trade. And those are elements of uncertainty that are inevitable that will come forward. I think from a rates and an FX perspective, it's about, let's say, assuming Trump was to win, it's about his trade tariff, trade war policies and what that might do. And secondly, his ability in terms of implementing fiscal stimulus like he did in 2017. And I think given the fact that the tariffs haven't really changed from what he implemented back in 2018, the impetus for that to strengthen the dollar is a lot less than it was in 2017. And then, of course, his constraints, I think, in terms of further fiscal expansion, given where we are in terms of US debt levels, again, I think is a lot more constrained than it was in 2017, 2018. So the impetus for dollar strength based on what happened when Trump won in 2016, I think is a lot less now than back then.
An interesting comment to watch at a time when President Trump may or may not be the Republican nominee. We, of course, the jury's still out on that. But certainly, to your point, something a lot of people are watching and even assuming in their base trades. Derek Halpenny, we have to leave it there. But we thank you so much for your analysis. He, of course, is the head of research and global markets for EMEA and international securities at MUFG. Plenty more ahead. Stick with us. This is Bloomberg. Hamas says Israel has killed one of its senior leaders in an explosion in Beirut. Lebanese media say an Israeli drone struck an apartment building in the capital, killing the deputy head of the Hamas Politburo and 5 other people. Israel, on the other hand, has not confirmed it was behind the attack. Joining us now for more context on this, Bloomberg's Sam Dagger joining us out of Riyadh. Sam, can you talk to us a little bit about the Beirut blast specifically in the context of the conflict?
Absolutely. Good to be with you. Saleh al-Aruri, this Hamas leader, was actually one of the co-founders of the Qassam Brigade, which is, which led the attack on Israel on October 7th. So he's a key figure. And beyond that, he's been instrumental in trying to establish or expand Hamas's presence in the West Bank beyond Gaza, and also to strengthen the ties between Hamas and Hezbollah and Iran as part of the so-called axis of resistance. These are proxy groups that work very closely with Iran, be it in the Palestinian territories, in Lebanon with Hezbollah, in Iraq with the militias there, in Syria through the Syrian regime and militias on the ground, and obviously in Yemen as well. So he was an instrumental figure. And it seems like after October 7th, both the U.S. and Israel are going after key figures in this network, because last week we had Israel, it didn't come out and confirm it, but all indications was Israel assassinate one of the top Islamic Revolutionary Guard Corps commanders, Iranian commander in Syria, who was orchestrating attacks both on Israel and U.S. troops in northeast Syria. And then also the Biden administration came out last week and ordered retaliatory attacks against Iranian proxies in Syria. So I would put it in that context.
Well, speaking of the context, I think for a global audience, it's important to understand the dynamic between Aruri, as you point out, and what he was actually doing in Lebanon. Where does Lebanon fall in all of this?
Great. Obviously, all eyes are on Lebanon, and all eyes are on whether Hezbollah is going to respond to this, because this happened in one of the most secure areas in the southern suburbs. You could call it almost like the area where Hezbollah's command center is in the southern suburbs. So obviously a very significant security breach, and everybody is waiting for the Hezbollah leader, Hassan Nasrallah, to come out later today to weigh in on this. He was scheduled to speak anyway, but obviously this will be front and center. But I would actually think that maybe this time the response will not come from Lebanon. It will maybe come from elsewhere, because that seems to be like the pattern right now. With this network that Iran has built, they're all working in unison, whether in Lebanon, in Yemen, in Gaza, in Syria, and Iraq. So we may well see the response come from Yemen. We don't know, but all eyes are in Lebanon still.
It's really something we're watching very, very closely. Of course, the geopolitics and the dynamic in that region. It's a very dire and sensitive situation. Bloomberg Sam Dagger joining us from Riyadh for that crucial context. We thank you as always. I want to get to other top stories. Air crash investigators in Japan are searching for answers after a deadly runway collision killed 5 people. The plane was on course to deliver relief to the country's earthquake zone. Bloomberg's Kurumi Mori reporting from Tokyo.
A devastating start to the new year in Japan. First, a 7.6 magnitude earthquake in coastal regions. Now, a plane crash here at Haneda Airport in Tokyo just a day later. Nothing has been confirmed, but officials are looking into potential miscommunication between the cockpits and air traffic control. Japan Airlines Flight 516 coming from Hokkaido was trying to land. Meanwhile, the Coast Guard plane was set to take off to deliver emergency aid for earthquake victims. The massive explosion where the 2 planes collided left 5 Coast Guard members dead and 1 severely injured. Local media now reporting that the surviving pilot said he thought he was told to get on the runway and take off, while air traffic controllers say they instructed the Coast Guard to wait ahead of the runway. No official conclusion yet, but it's a tragedy on top of a tragedy. Kurumi Mori, Bloomberg News, Tokyo.
I want to stick with the story in aviation, this time in the deal space. Shares in Atos have given back earlier gains. They said it was in talks with Airbus over the sale of its big data and cybersecurity unit, a deal that could be worth up to 1.8 billion euros. But Airbus saying there's no guarantee that discussions will actually lead to an agreement. And Atos saying it's already had interest from another party. And of course, those Atos shares higher by about just shy of 2%. They were higher originally at their European Open at about 5%. So very quickly paring back some of those initial gains. Coming up, we discuss more on the transportation sector, this time with Tesla exceeding its annual delivery target. It's been overtaken by BYD over in China in terms of global electric vehicle sales. We'll bring you the story next. This is Bloomberg.
Trying to compete. Why do you laugh?
Have you seen their car?
I have seen their cars, yes. In fact, at the Berkshire Hathaway meeting, I saw their cars.
Yeah.
Well, they're on a different. Tell me why you're laughing. You don't see them at all as a competitor?
No.
That was Elon Musk speaking to our former colleague Betty Liu back in 2011, saying that Chinese EV maker BYD may not even qualify as a Tesla competitor. Of course, Musk has already publicly changed his view since then when it comes to the Chinese electric vehicle maker. He posted this back in May last year, saying that their cars were now, quote, highly competitive. A real 180 when it comes to Elon Musk's take on, of course, BYD. In the meantime, Tesla has been overtaken by the company in global EV sales for the very first time in history. Despite Tesla delivering more vehicles than expected in the fourth quarter, the change reflects China's growing influence in the automotive industry. For more on that, let's bring in Bloomberg's Craig Trudell, who's been here with me in London. Craig, this is a really interesting dynamic because back in December, we got some of these delivery numbers for a lot of the Chinese EV makers, and they did not perform well. And still, Tesla doing kind of okay. Tell us more.
Yeah, I mean, BYD, I would separate them from a lot of the other Chinese car makers where, you're seeing really a two-horse race here where you do have BYD and Tesla, sort of head and shoulders above everybody else, both in China and globally, I would say, from an EV perspective. But this absolutely is a case of a company that, back in 2011, there was a reason to kind of snicker at BYD's cars. They were not very attractive. They were not particularly competitive. But this was a company that has kind of out-Tesla'd Tesla. They are, employing a lot of the same strategies, being vertically integrated and sort of, in control of their own destiny and making a lot of the components that go into the cars themselves. And particularly in batteries. That's really their specialty. And the competitiveness of their batteries from a cost perspective has really gone a long way to putting them in a position to where, last quarter really wasn't even close. BYD pulled ahead of Tesla by quite a large margin.
How much of this is a question of where the market actually is? Because BYD sales are largely driven by the Chinese consumer. Tesla, a slightly more global company. Is this really still significant to the global EV story, or is this China?
Yeah, I think it absolutely is the case that, we talk about EVs as sort of dictating the future of the auto industry. And, China is far and away ahead of the rest of the world in terms of, getting an EV industry up and running, both from a manufacturing perspective, a supply chain perspective, and from a demand point of view. And so, this is extremely important that the rest of the industry play some catch up. We've seen domestic car companies in China really pull ahead of foreign car companies. And unless that changes, it's not going to be, a good trend by any stretch of the imagination for the rest of the industry.
Well, Craig, one of the things we've been watching very, very closely is, of course, Tesla's share price. We know it's a giant in the S&P 500 and, of course, indices around the world. And one of the things that impacted the Tesla share price was Elon Musk's acquisition of Twitter, the idea that if he changed focus from Tesla, Tesla might fall behind and then pressure the stock. It was a whole saga, as you remember. Is he the one responsible for falling behind this time around?
I think just to maybe give a little bit of a preview of today's Hyperdrive newsletter, we'll look at this and just, I think for me what stands out from the Walter Isaacson biography that was published last year was, Musk 3 years ago said that he believed Tesla was going to be able to market a $25,000 Tesla in about 3 years. That is now looking like a proposition that may be, yet another 2 or 3 years away. And what was interesting about that biography was it sort of, described the extent to which Musk himself really, in Isaacson's words, repeatedly vetoed that project. And he got in the way of that. If they have a more affordable Tesla to offer, it absolutely would change the competitive dynamics here.
Yeah, we'll see if Tesla actually still has a little bit of fight left in them. Bloomberg's Craig Trudell, we thank you so much for that crucial analysis. Coming up, we continue the tech conversation, this time around AI. Stick with us. This is Bloomberg. The New Year hangover, it's one of the weakest starts to a year for stocks and bonds in over a decade. And on today's Fed Minutes may signal whether last year's rally was indeed overdone. In corporate news, Airbus begins initial talks to acquire the cybersecurity and data unit of Atos, a deal that could value the business at up to $2 billion or 1.8 billion euros. And more corporate news, the new leader in the global EV race is Chinese automaker BYD outsells Tesla for the first time in history. Good morning and welcome to The Pulse. I'm Kriti Gupta in London. The big conversation of 2023 was all about AI and whether or not this kind of excitement around the technology was accurately priced into the market on either direction. The idea here is perhaps it fueled stocks to those record highs, but did it maybe go too far? Bloomberg Intelligence, for example, saying the generative AI market is set to reach $1.3 trillion. That is trillion with a T by 2032. But as the market grows, countries, companies still grappling with how to actually regulate it. In December, for example, the EU making a critical step with a landmark AI policy poised to become the most comprehensive regulation of artificial intelligence in the Western world. Joining me now to discuss, Somesha Ferdinand, financial services lawyer at Ferdinand Law Group. Somesha, a pleasure to have you on the program. We thank you so much for joining us this morning. I think what's really important to keep in mind here is that in the history of big tech, I would say in the last 20 years or so, Europe notably, and I would argue some of the other regulators around the world, were behind when it came to regulating things like social media, Instagram, acquisitions from Facebook, for example, getting a lot of scrutiny. And it feels like they're avoiding some of that repeat when it comes to AI. The question, though, is, do you think that it's a successful venture given the technology is so new?
I think that what the EU has done in the EU AI Act is a very thoughtful step forward. It is clear since last year, when we all saw what an incredible product that ChatGPT was and how much easier it can make things for us, that it also is something where we need to be clear about the safety concerns for vulnerable groups. We need to be clear that it will not contribute or exacerbate any kind of discrimination, efforts. And so what the EU AI Act has done, this risk-based approach, as well as trying to put some parameters around generative AI, is a real step forward. And we'll see over the course of the next year how quickly things move, whether the EU AI Act was the right parameters to put into place.
But that is a EU story, and Somesha, Europe is famous for being kind of a leader when it comes to regulating not just big tech, but corporate Europe for a while, almost to their detriment, almost discouraging in some ways some of the new technology that is then popping up in Asia or even the United States. What kind of precedent does it set for the rest of the world?
Well, I think that the EU is obviously in a very unique position because if you think about it, the EU is 27 different nation states. And so in order for the EU to have an integrated marketplace, which is what is supposed to be one of the benefits of all of these nation states coming together, they do have to have harmonized rules across the 27 countries. So in some ways, the regulation, whilst it can be very heavy, it is something that is necessary in order to have an integrated market. Now, in the U.S., there obviously is a little bit more of a focus on innovation and making sure that the innovation and the AI developments that have taken place so far, and in China as well, that those continue and that they don't lose any kind of space that they have in the market. But I think that the United States, the EU, the UK, the different countries in Asia as well, they all realize that AI technology is something new. It's incredible. We want to continue to develop it, but we need to understand and have some kind of safeguards for vulnerable populations. It's an election year coming up to ensure that the information that is provided to the public and is provided to investors is reliable information. So all of the countries, in addition to the EU region, have started to think about, okay, what is the common language, the common definitions, the common taxonomy that we can have to talk about AI and to talk about generative AI so that we can continue to promote the innovation and at the same time ensure market integrity and ensure consumer protection.
I mean, you named one of the kind of places in your list of the countries looking to tackle the AI story. The UK in particular, in I want to say the last year or so, has been very vocal about regulation around tech as well. The CMA, for example, very vocal about Microsoft's Activision deal amid many other tech acquisitions in the UK, setting a precedent, by the way, for the rest of the world. Somesha, are there then cracks between the EU set of governance when it comes to AI, the UK version of that, the US version of that? What are the differences here when it comes to that legislation?
There are significant differences, and as you pointed out earlier, the EU does have a much more prescriptive approach. The EU has taken categories of different AI systems, and they will classify them as minimal risk, high risk, unacceptable risk. Those unacceptable risks will be banned. So things like social credit scoring, how we have cognitive behavioral tools for vulnerable groups, for example, children, for example, activated toys, biometric identification, the kind of facial recognition tools. These the EU has set very clear parameters around it. What has happened in the US and what has happened in the UK is not quite as prescriptive. So in the US, we saw that President Biden had an executive order, very ambitious, covering a wide swath of areas from privacy concerns to health care to, again, consumer protection, also looking at how employees are treated. And what the U.S. has done so far has said, we have legislation already in place. Let's encourage and tell the regulating agencies in these different areas to prioritize AI so that they can understand how AI-related risks can be managed within the legislation that we have in place so far. The UK issued a white paper. The UK is also, as you know very well, at the end of the year, had the first global AI safety summit. So the UK, while it doesn't have specific legislation on its books yet, is being very thoughtful about how to take that principled approach around safety, around privacy, around infrastructure that allows for innovation, but also manages any safety concerns that may arise, particularly for certain populations that have already been the subject of discrimination up until now.
Well, Somesha, talk to us a little bit about timeline here then. I mean, it feels like a very noble cause when you lay out some of the risks that these regulators around the world are seeing. But for a financial audience in particular, I think the timeline really matters here because this technology is growing so quickly. It's being adapted very, very quickly, even by the general public who, people like me now know what ChatGPT is and can actively use it on a search engine. Can the regulation catch up? Can it match that speed?
You are absolutely making the right point. The timeline is very sensitive, and it's a very fast-moving product. The next iteration of ChatGPT will come out this year. We have no idea how it will change from the current version. But what is clear, if we're talking about the EU, for example, is that the EU AI Act will come into place in a graduated level. So in the first 6 months, it will ban those unacceptable risks that I mentioned earlier, the credit scoring, the biometric identification, etc. And then it will only be 12 months later that the EU AI Act will start to treat those more unacceptable risks, which may have some safety concerns, but that don't need to be outrightly banned. So we're talking about 2025 for that act. For the U.S. and the executive order, well, there's going to be an election year, so there won't be any more significant litigation than what we've already seen up until now. And as we've mentioned earlier, the UK is taking that principle-based approach, but doesn't have specific legislation. So whatever the Magnificent Seven and those tech companies have done for 2023, what they do continue to do for 2024, and as they continue to have developments, we just have to hope that the regulations that we've put into place up until now are fluid enough to allow for at least those safety concerns to be addressed and managed.
Well, we're lucky we can count on you to keep us posted on that. Somesha Ferdinand, we have to leave it there, but we thank you so much for joining us this morning. A financial services lawyer at Ferdinand Law Group, bringing us the latest on that AI regulation story, which is sure to be a big theme for 2024. Now, coming up on the program, Ethiopia trades a stake in its biggest airline for access to the Red Sea. The move risks heightening regional tensions. We're going to bring you the story next. Stick with us. This is Bloomberg. Ethiopia has signed a deal with Somaliland, a breakaway region of Somalia, to gain access to the Red Sea in exchange for a stake in its flagship carrier, Ethiopian Airlines. But the deal by landlocked Ethiopia risks heightening tensions in a region that's already racked by conflict. Bloomberg's Ondiro Ogonga is all over the story. She joins us now from Kigali. Ondiro, what is the latest on this deal?
Well, as you rightfully said, Kriti, Ethiopia will get access to the sea from Somaliland through the Gulf of Aden, and this will enable them set up a military base and use it for commercial purposes for a period of 50 years. Further, 20-kilometer stretch will be leased to the Ethiopian Navy for a base, and it will also be used as one of their ports of entry. And Ethiopia is at liberty to develop infrastructure and a corridor. In exchange for value, they get to give Somaliland a stake at Ethiopian Airlines and also recognize them as a sovereign state. If they do so, they'll be the first country to do so, and this goes to play in the international playbook of gathering support so that Somaliland can be able to source for funding and also seek for aid.
Talk to us a little bit about the Somali side about this. I mean, it does seem like a win-win on the surface, but clearly not everyone is happy. Somalia publicly denouncing the agreement. Can you walk us through the dynamic there?
They are not happy because they still consider Somaliland a part of their sovereign territory, and they're terming the agreement as an act of aggression against their sovereign and territorial integrity. And also, it's a threat to their maritime resources. They say they're going to fight this through every legal channel available at their disposal. And part of the decisions that they're also making is we've seen they've pulled their envoy from Ethiopia. And this is not the first time that access to the sea is creating tension. Last year in October, Prime Minister Abiy Ahmed said failure to gain access will lead to conflict, and Eritrea, Djibouti, Somali came out to condemn this statement, saying their sovereign and territorial integrity is not up for debate. So this new agreement is highly likely to heighten political tension and further strain diplomatic ties in the Horn of Africa.
Bloomberg's Ondiro Ogonga in Kigali bringing us that crucial story from from the continent of Africa. We thank you so much for your insight and reporting this morning. I want to bring to you some of the other news stories we're following from around the world. Back in the United States, Harvard President Claudine Gay is stepping down, ending a short tenure marred by allegations of plagiarism, as well as a campus controversy over anti-Semitism. In a statement, Gay says it's in Harvard's best interest for her to leave the job. Her exit is a dramatic about-face from her acclaimed start in July as the university's first black president. Speaking of presidents, Donald Trump has filed a lawsuit seeking to restore his name to Maine's presidential primary ballot. The state last week declared the former president ineligible for another term under the U.S. Constitution's 14th Amendment, which bars candidates who've engaged in insurrection. Now, Colorado Republicans have already asked the Supreme Court to reverse a similar decision in their state. And social media site X has started showing news headlines again alongside links shared to the service. The move reverses a change that owner Elon Musk said had come directly from him back in October. Critics have said removing the news headlines made it more difficult to determine what articles other users were sharing. And we go right back to the markets here. Speaking of one of the biggest players, let's talk about JP Morgan hitting a record high in share price yesterday in the U.S. session. This is really important as we talk about the read-through into perhaps some of the net interest income margins from a lot of the central bank decisions from around the world. Higher interest rates means higher profits for some of these banks, not to mention a lot of the volatility in the markets also helps the trading platforms and the trading volume, which again, feeds into the market making that JP Morgan and some of its peers does as well. But the big question is now that we are going to see perhaps a little bit more calm going into next year on the assumption that the Fed has actually accomplished its goal on inflation and those rate cuts that are being priced in the market are actually going to come true. To what extent does this kind of momentum you're seeing by the biggest players like JP Morgan actually sustain? Well, that's just one take of it. Despite the rally, Wells Fargo analyst Mike Mayo has actually demoted JP Morgan as his top pick among big bank stocks for 2024. Instead, he's picking Citigroup. Here's why.
I think the bottom line is that Citigroup is becoming a much more simple and profitable firm whose earnings should double over the next 3 years. But this is make or break time for Jane Fraser. You said, is this due to Jane Fraser? Maybe. I think so. Yeah. But not definitely.
Wells Fargo's Mike Mayo speaking to Bloomberg's Romaine Bostic and Scarlett Fu about that turnaround story in Citigroup. Well, the analysts are noticing, and of course, Mike Mayo, a major player on Wall Street when it comes to that bank's coverage. And speaking of our bank's coverage, later today, do not miss our exclusive interview with Morgan Stanley's executive chairman, James Gorman. He, of course, is on his way out, transitioning to the new chief there. His final interview, an exclusive with our very own Sonali Basak, 3:30 p.m. London time, 10:30 a.m. if you're in New York, and of course, 11:30 p.m. if you are joining us from Hong Kong. Now, coming up, we go from big banks to big pharma. Anti-obesity drugs could be worth $80 billion by 2030. We're going to take a deep dive into a market that's getting quite a bit of attention from investors. Stick with us. This is Bloomberg. It's a market that's getting a lot of attention from investors. Bloomberg Intelligence is saying that anti-obesity drugs could be worth, get this, $80 billion by 2030. So far, the sector dominated by just two names, Novo Nordisk and Eli Lilly. For more on today's Bloomberg Deep Dive, Sam Fazeli joins me from Bloomberg Intelligence. Sam, okay, so they're the stars of 2023. Will they be the stars of 2024?
Morning, Pretty. So I want to just first up say that a lot of this work, 99.9% of it, was done by my colleague Michael Shaw. So a big shout out to him. Will the stocks perform the same next year? I think a lot of the expectation has already been explored by investors in these two companies. And given the day and a half of trading already this year, you can see that there might be a little bit of shifting going on in terms of people thinking, well, there's a lot of other pharma companies that we've forgotten about. Some of them may be active in this space, depending on how data pans out this year. So there could be a little bit of at least more interest in other pharma companies, not necessarily a major negative for Novo and Lilly, but more interest on the ones that underperformed in 23.
When it comes to the strategy that a lot of pharmaceutical and big pharmaceutical companies are using, is it then easier, is it incentivized almost to then go find these acquisition targets that specialize in anti-obesity, have already gone through the regulatory process in various countries, as opposed to starting from scratch to build their own candidate?
Yeah, always. Pharma companies pretty much do that. I think you could assume that between 50 to 70% of a pharma company's pipeline is acquired. Not necessarily drugs that are on the market, but often products that are in development. And you saw a flurry of deals at that early stage of at the very end of this year. You saw AstraZeneca buy, not obesity, but generally a flurry of deals into phase 1, phase 2. So I would expect to see more of that, especially if in-house products fail. So let's say Pfizer, middle of the year, finds out that their efforts to try and convert their oral drug to a once-daily great drug doesn't pan out. They could become an acquirer of a biotech company that's developing obesity or metabolic disease drugs.
Talk to us then a little bit about whether or not you're talking about an $80 billion market cap, basically, until 2030. What gets in the way of that? Is that a realistic target?
Yeah, so in this particular area, I think the biggest issue is getting reimbursement, getting bodies such as the Medicare in the U.S. to fund the use of these drugs.
Yeah.
And logically, they should. But we're in an election year. It's a huge burden on Medicare funding. It has to really be worked out quite seriously. And maybe more data supporting the broader health impacts of anti-obesity drugs, such as we've been seeing in heart disease, cancer, which we talked about earlier, 50% reduction in the risk of cancer with one of these drugs. Those kind of data will continue to build the case for getting these drugs to the people who need them. And then, of course, volume will go up, and then I'm assuming with that, price will keep coming down.
In terms of pricing, though, and this was something that was actually talked about, I think, in a Jefferies upgrade or Jefferies note this morning, talking about the likes of Novo Nordisk and AstraZeneca, among several others, are talking about that pricing power in the context of not just Medicare, but some of the political overhangs in the United States as well. What's the read-through there? What do we pay attention to in 2024 in our last minute here?
Yeah, in 2024, we do have the IRA, Inflation Reduction Act, coming out with the pricing that they've negotiated for the first 10 drugs that are going to be hit. And I think we're expecting that in the first quarter. I don't remember exactly the date that it's coming. That is going to be setting the tone for how pricing will evolve in the U.S. But pricing has always been a question with large pharma. It's never going to change. What the critical element here is give the market innovative drugs that solve a major problem, and the market eventually follows.
A really very, very interesting dynamic. Sam Fazeli from Bloomberg Intelligence walking us through what he's and his team are calling for is going to be an $80 billion market by 2030 when it comes to those anti-obesity drugs. And you said it there, or he said it there as well. There has been so much momentum behind this sector as well. If you look at it from a more macro standpoint, some would argue this is a momentum, some sort of drive behind these stocks that is akin or similar to what you've seen in the AI story, where everyone kind of wants a piece of it, but there's only so many players. So that's going to be something to think about as we talk about allocation to some of these major thematic trends in 2023 and whether or not they spill over into 2024. Of course, we are only on the second trading day of the year, so it is early to make that call. But again, $80 billion by 2030. That is the call from Bloomberg Intelligence on that sector. Up next, Bloomberg Brief, Danny Berger in London, Manus Cranny in New York, setting you up for the U.S. trading day. Stick with us. This is Bloomberg.